Good morning. This is Mark Soderberg with ADM Investor Services with your early morning ag outlook for Thursday, February the 15th. Well, markets have been grinding sideways to lower all week, eagerly awaiting the USDA outlook form data here this morning. We got those numbers out and pretty much across the board, I think we're in line with expectations. In corn, acres came out at 91 million. That was the same as the baseline estimates in November, perhaps slightly below expectations and down 3.5 million from what farmers planted last year. Trendline yield was plugged in at 181 bushels an acre with production just over 15 billion bushels. Ending stocks are expected to build up to about just over 2.5 billion bushels. That was slightly above expectations. The average farm price expected to drop 40 cents a bushel to $4.40. For the 24-25 marketing year. Total usage for the new crop expected to jump about 150 million with increases to ethanol exports and feed usage. In beans, acres at 87.5 million. That's up 4 million from last year and slightly above the November baseline numbers. With a yield of 52 bushels an acre, production works out to a new record at just over 4.5 billion. Ending stocks expected to jump to 435 million. Average farm price down $1.45 to $11.20. Overall demand is expected to jump about 250 million bushels with big jumps to both crush and exports. Bean oil usage for the production of biofuels expected to jump 1 billion pounds to 14 billion, a new record. In wheat, pretty much in line with expectations, production 1.9 billion, stocks expected to grow to 769, average farm price plunging $1.20 to $6 a bushel. From the current marketing year of 720. Prices overnight actually dipped, were lower overnight and actually dipped to new lows shortly after the USDA numbers were released. We saw a little bit of a firming and now we're drifting back pretty much slightly lower across the board, down 1 to 2 in the corn, 2 to 5, let's call it, in the beans, down in both products, just slightly lower in the meal, down 30 to 40 in the oil, and wheat lower across the board. Corn so far has not made a new contract low after matching the old contract low overnight. In soybeans, we did plunge into new lows. However, at the lows overnight, we're still about 20 cents above the contract lows from last spring. In wheat, like I said, lower pretty much across the board, trying to hold on to yesterday's lows. We have export sales at 7:30 this morning, NOPA crush at 11 o'clock, expecting to see a modest drop in the amount of beans crushed in January, down from a record high in December. Look for also a little bit of a buildup in the bean oil supplies. Later today, we also get an update from the Buenos Aires Grain Exchange on the Argentine crops. We have a lot of wheat business going on. Expect results from Algeria on their recent wheat purchase. Prices believed to be trading around $230 a metric ton on a CNF basis for the Algerian purchase. Japan bought just over 115,000 metric tons of U.S., Australian, and Canadian wheat. And the lowest price offered for Egypt's recent tenders reported at $222 a metric ton on a FOB basis. No results announced just yet. So we got the USDA numbers, outlook form numbers out. Prices have recovered a touch, now drifting back. We'll see if we can generate any further price strength on speculative short covering. South American weather looks mostly favorable moving forward. However, we still have a wide disparity in production estimates, which over time should narrow up. However, now we just need to get a little deeper into harvest to see where yields go from here. So thank you for listening, everyone. I hope you have a wonderful day.